Hey guys, the market is not doing so hot today. Our Robinhood portfolio is down 1.65%, and our actual Roth IRA is down 4.2% right now. And I want to go over some high quality stocks to buy now because if you're looking for deals, there's a lot of deals out there that you could buy the dip on. And I want to share with you a few companies that I like. We're going to be showing you the numbers for yourself. We'll be digging into some of the financials here, but look at my watch list right here. A lot of popular stocks are falling, like Nice, for example. We'll just start with this stock right here. This is a $10 billion company. And look at this right here. Just look at the net income this company makes. This is a very profitable stock. And they also look at this balance sheet right here. Incredible balance sheet. I believe they have no net debt whatsoever. I believe they have like $1 billion of net cash. So I'm not doing a huge deep dive and I'm not telling you what the company does, but I'm just sharing with you some stocks that I do like. There's also Grab Holdings right here. Uber just took an 11% stake in this stock right here. So if you own Uber stock, you technically own a little bit of Grab Holdings, which is kind of cool. Fiverr's down on the day. I don't love that stock. And look at INOD right here. This is a stock that I've kind of been recommending over the past couple, months recently. I do own this one on my Roth IRA for full transparency. I don't own that many shares, just literally two, but we are up 42% since we bought the stock. So that's good news, even though they are down 10% on the day. Here's what I love about this company. This is all organic right here. The sales are up 135% year over year. Their main customers are literally Microsoft, Google, Amazon, Meta, and I believe that's it. Those it's five out of the Magnificent Seven. It's just Apple and Tesla that aren't customers of InnoData right here. And they also just got very profitable as well. They just made 17 million of net income in the most recent quarter. And they're they're starting to make free cash flow as well. So that's why I own InnoData. Go check out one of my more previous videos I made about them if you're really curious. This next stock right here is Reddit. This is a great company. Even though it's kind of a meme stock, they actually have great numbers. This is a $31 billion company. They're down 9% on the day, but look at the net income. If you're wondering why they lost 500 million right there, remember they just IPO'd and it was like a one-time adjustment anyway. Either way, in the two most recent quarters, they're actually net income positive. They just made 71 million of net income. And also, Reddit has no debt whatsoever. This is a debt-free company. They're also making free cash flow now. Look at that. 50 cents of free or 41 cents of free cash flow. Yeah, look at this balance sheet right here. This is phenomenal. The liabilities are so little. Let me actually show you how much cash they have. So they have $1.84 billion of cash. That's an incredible amount of cash. So $1.84 billion of cash. And look at that. The debt says zero because they literally have no debt whatsoever. So that's the good news that they're very financially healthy. I'm guessing they're making a lot of interest on their cash as well. And if you're looking to enter Reddit, now could maybe be a decent time, not to put a huge position in them, but to start a small dollar cost average. Now, this next stock right here might surprise you on how good they're doing. This is ticker symbol RCL or Royal Caribbean. They're a $65 billion company, and you may not know it, or maybe you've heard of them, but this is actually a cruise line stock. And I usually don't like the cruise line industry. That's like the first thing. If there's a recession, people aren't going to go on cruises, but look at the net income they make every quarter. This is ridiculous. They're making net income literally every quarter. No other cruise line is this profitable. Like I know Disney has some cruise lines. I do own Disney stocks, so I do have a little bit of cruise exposure, but look at the amount of net income this company is making. Look at the EPS in the most recent quarter. They made $2 of EPS. And they just started paying a dividend, and it only cost 55 cents. So you get a 1.3% dividend yield here. And let's see how much buybacks they're doing. So they're making nearly $1 billion a quarter. Yeah, the dividend they just started paying only cost $107 million. So very safe and healthy payout ratio. So it doesn't look like they're doing any stock buybacks right now. So you have been diluted a little bit, but still, those net income numbers are very impressive. And if we look at the actual PE ratio, the net income multiple, they're trading at 16 times forward PE. So they're expected to grow their net income even more. And look, this is the thing. Even though they're diluting you, the EPS is still up 148% year over year. I like looking at the EPS because it's the earnings per share. It includes dilution. So, and look at the free cash flow. Wow, I forgot to look at this. So there's EPS, which is net income per share. Then there's free cash flow per share. It's even better. $5.50 of free cash. So anyway, Royal Caribbean, I can understand why this one has done so incredible. I literally, as crazy as it sounds, I might just buy one share of them in my Roth IRA or something. I don't know yet. But yeah, that's an interesting one. Now, here's one you've definitely never heard of before. This is AVPT. This is AvePoint, and they're only a $3.35 billion company, and they're down 7% on the day. But look at this sales growth. This is really impressive growth. The sales are up 22% year over year. And if we look at the net income right here, you do got to be careful that they're not completely net income positive yet. But look at this. They actually made net income in the most recent quarter. So, and that's real. If we go to the operating income, they actually did make money in the most recent quarter, which is a great sign. And the free cash flow looks even better. Look at how the free cash flow is just growing and growing. It just hit a new record. So AvePoint, this is only a $17 stock. So, also, I forgot to zoom out on the stock. They've done pretty incredible. So, this is kind of like INOD. I wouldn't mind buying this stock at a relatively all-time high level. And again, I'm definitely not an expert. Don't listen to me. This is not financial advice. Look at our Webull portfolio right here. We're actually down all-time 7.3%. And let me show you the stock I just bought. Oh, and that's mainly from UiPath right here. But here's some of the stocks that I just bought. Toast, we bought Toast. We made a video about these stocks not too long ago. Toast just reported earnings. The sales were phenomenal. We can actually view them really quickly. Look at this right here. It actually hasn't updated yet. So we'll look at Toast in the future. Calmain, also literally ever since we made the video. Luckily the video went out like as the stock was tanking. So we do own 6 shares of Calmain. As you know, this is they have a 20% market share for chicken eggs. So this is one of the largest chicken egg producers. Look at the dividend. You get a 4.76% dividend yield. Again, they're in the commodities industry. They just sell eggs. And because they're in the commodities industry, look at their PE ratio. They're literally trading at 7 times trailing 12 months PE ratio. And look at the forward PE ratio. So based off next year's net income, they're trading at 5.65 times net income. So I think it might be reasonable to start a position in them. Or I do own 6 shares of them. Again, be careful. Another stock I just bought recently was ticker symbol TAP. This is Molson Coors. They make the beverages. I don't know if I can really mention what they sell here, but look at the EPS and free cash flow per share. They're just very profitable. They're making net income and free cash flow. Look at the dividend. You get a 3% dividend yield here. So if you like dividends, this is a nice one, I think. You get a 3.12% yield. They raise their dividend every year. You get 44 cents per share right now. And look at the EPS. They made $1.40. Actually, I like to visualize it better for you. Look at the most recent quarter. They made $300 million or $293 million. So remember that number right there. 290 million. And look, the dividend only cost 90 million. Now, for a company with a 3% dividend yield, this is a pretty good payout ratio in my opinion. And if we look at the diluted weighted average shares, they have bought back. This is another incredible thing. So not only do you get a 3% dividend yield, they've had so much leftover money that they're buying back their own stock like crazy. They've bought back 4.5% of the company just in 1 year. So yeah, remember how they were spending 90 million on dividends? Look, they just spent 200 million on buybacks. They're a super shareholder friendly company. So look at that. If they've spent $1 billion on buybacks in the past year, look at their total long-term debt. They have $6 billion of debt. I believe that is very healthy. You know, they could pay off all that debt in a couple years if they wanted to. On top of that, they still have $1 billion of cash. They have or 969 million of cash after doing the 200 million of buybacks and the dividends. Anyway, Molson Coors is a very cool company. I like the brands that they own as well, and that's why I own some of them. So, let me know what you think about that one. All right, so this next stock right here, I promise will hopefully really impress you. This is Wingstop right here. We've probably all heard of this company before, but hear me out on this one. They're down 6% on the day. Look at how incredible their growth is. Look at their royalty revenue. Remember, royalties are all high margin for the company. And if it'll load here, I want to show you that. Yeah, look at this royalty revenue. And this is on the quarter. It's up 39% year over year. That is phenomenal growth. And that's just their royalty revenue, which is half their business. But now let's look at their advertising fees. Let's see how much revenue they're getting from this. This is up 42% year over year. So here are both of their 2 main segments of business growing 40% year over year. Now let's look at their company-owned stores because Wingstop does own some stores. The royalty fees are from the stores that they don't own. They just collect little royalty franchise fees. But look at the company-owned stores. Let's see how this is doing. It's up 30% year over year. So Wingstop, in my opinion, is an incredible growth company. And it's not just the sales growth, look at the profits. The net income is up 42% year over year. So Wingstop is a very profitable company. I like their business model. They collect those high margin royalties. Like, yeah, look at their, well, I, it's a blend here, but their gross margins are 48%, net margins 16%. They're not exactly a restaurant, so that they collect royalties, so that's higher margin. Anyway, Wingstop, cool stock. I do like them. Yeah, look at our Moomoo account on the day. We're actually down 0.5%. Not too bad. We're not down too much money. Oh yeah, this app right here that I'm on is called Moomoo. If you want to download it with my affiliate link, it's in the link in the description. And this is why I like the app right here. If you look at the middle of my screen right here, I have $1,200 of cash, earns me a nice little 4.10% yield, made me 14 cents of interest today. Like, and it's free. You don't have to pay $5 a month like on Robinhood. You have to pay $5 a month with Robinhood Gold to get the 4.5% APY. So you get a little bit lower yield, but it's completely free. So if you want to download, if you deposit $100, you'll get 5 free stocks, and I will also get 5 free stocks. So I'd appreciate that. Anyway, again, look at PERI on Network right here. This company actually just reported earnings, and they fell 12%. And I actually like the earnings. This company is trading at near cash value, but look at the trailing 12 months PE ratio. It says 34. They completely lost all growth. I mean, I can't in good conscience like recommend anyone else buy this stock, but like, look, the sales are down 44%. The net income was 5 million. They did make net income in the most recent quarter. Good news. But I'll show you this right here. Look at their cash on hand. They have $373 million of cash. So remember that number, $373 million of cash, and the total market cap is $415 million. And they have no debt at all. They're a completely debt-free company. They're making a bunch of interest. You know what? As the last final stock here, I'll give you a quick analysis on PERI on Network. Again, if you're going to buy this one, don't put a lot of money into this one. But I think it's a lot safer play than a lot of other super small micro market cap stocks. I think this one's a lot more safer than a lot of them. But anyway, $383 million of cash. And look at that. Total debt is 0. So they have no debt whatsoever. And look at the interest they're making. They made $5 million of interest. So that's actually a lot of money. So $5 million of interest, that's a great sign. Did they buy back any stock? So yeah, as we saw, their stock price was severely collapsed. Remember, the whole market cap is 400 million right now. It's 401 million. And look, they just spent 14 million on buybacks. That's actually very significant. And 20 million the quarter before. 20 million is 1% of the company. Or I like that they're even looking for some buybacks. They could like buy back half the stock if they wanted to, but I think they'd rather keep the cash, earn interest on it, maybe even acquire a company. They actually, about a couple months ago, like 6 months ago, they bought a company for like 150 million. It was called Lexion or something like that. Anyway, if you guys enjoyed the video, let me know in the comments. I'll make sure to check out all the comments. And please drop a like on the video for me. I would very much appreciate that. It really helps out the channel. And I hope you have a great rest of your day. My name's Nathan Robert.